Welcome to the Deep Dive. We try to make complex stuff, well, simpler and faster to grasp.
That's the plan.
Today, we're tackling something that can feel pretty overwhelming. Annuities. Specifically, how to simplify choosing one if you want growth, but maybe aren't keen on managing all the details yourself.
Exactly. We're focusing on one particular product today, the NAC Guaranteed Allocation Fixed Index Annuity. It's available through Diversified Insurance Brokers.
Okay.
And our aim is really to see how this specific annuity tries to make diversification, easier and maybe offer more dependable growth. We're working off the product information provided for this.
Got it. So let's start with the core concept you mentioned, these pre-built model blend allocations. What does that actually mean for someone listening?
Well, think of it this way. Instead of you needing to research and pick, say, different index options or strategies.
Which can be confusing.
Right, very confusing. This annuity basically does it for you. It offers these ready-made mixes, these model blends, so you get diversification built right in from day one.
Oh, okay. So it saves you the work and maybe the worry of choosing.
Precisely. It streamlines that whole process. Less guesswork, potentially fewer missteps if you're not, deep in the financial weeds every day.
Feels like a weight off the shoulders. Now, the info also mentions automatic annual rebalancing. How does that feature play into this?
Yeah, that's important. Over time, different parts of an investment mix grow at different rates, right? So things can get out of balance.
Sure.
Rebalancing just means adjusting things back to their original proportions. Usually, that requires you to actively do something.
Mm-hmm.
But here, it's automatic. Once a year, the annuity rebalances the strategies within your chosen model blend, keeps things aligned with the intended approach.
So it maintains that diversification strategy without you needing to constantly monitor and adjust.
Exactly. Hands-off maintenance, basically.
Okay, let's talk about growth. The term dependable growth comes up, linked to guaranteed credited rates during the surrender charge period. Why is that guarantee significant?
Well, market volatility is a big concern for many people, especially nearing retirement.
Definitely.
These guaranteed credited rates offer a level of predictability. It means that, depending on the specific crediting method used, which is just how interest gets calculated and added,
Okay.
you have the defined minimum interest rate, or a defined calculation tied to an index, that applies for that whole surrender charge period.
And you can choose that period, 5, 7, or 10 years.
That's right. You pick the time frame, 5, 7, or 10 years, that matches your own financial timeline and needs. So there's a known factor for growth during that specific window.
Interesting. It also highlights strong accumulation potential and specifically mentions S&P index options. Why call out the S&P?
The S&P 500 is just a very well-known index. Lots of people follow it.
True, it's familiar.
So linking growth potential to options based on the S&P connects it to something recognizable, a major benchmark for U.S. stocks. It gives people a familiar reference point for potential performance.
Makes sense. And underpinning all this is the fact it's issued by an A-plus rated insurance company. What comfort should that rating give?
An A-plus rating from a major rating agency like AM Best signifies high financial strength.
Okay.
It suggests the insurance company is considered very stable and likely able to meet its long-term obligations, like paying out on these annuity guarantees. It's about confidence in the backing company.
Right. Security. Now, there was a case study mentioned, Mark and Susan. Can you walk us through their situation?
Sure. Mark and Susan, both 58, getting closer to retirement. Their main worry. Market swings potentially hurting their savings.
A common concern.
Very common. So they opted for this annuity, choosing the 7-year surrender charge period. They went with one of the pre-built model blends.
So they got that instant diversification.
Exactly. No need for them to pick individual index options. And the automatic rebalancing kept their strategy on track each year.
And the outcome for them.
Well, the information says that after 5 years, they saw steady accumulation in their account value. This apparently helped ease their anxiety about market risk and made them feel more secure about their retirement income goals.
And importantly, without the stress of managing it all themselves.
That seems to be the key point of their story, achieving their goals with less active management burden.
So if we boil it all down, the big appeal here seems to be simplicity married with some potential for steady growth.
I think that's a good way to put it. The NSC Guaranteed Allocation aims to be a kind of turnkey solution, prepackaged diversification, automatic upkeep, and aiming for growth with some security features in markets that can feel pretty unpredictable.
Okay, so the main takeaway for you listening. This annuity offers a simplified route to diversification and aims for dependable growth using those preset allocations and automatic adjustments.
Right. Which leads to a final thought, maybe for you to consider. In today's world, with markets sometimes feeling quite volatile, how might using an investment strategy that's pre-built and automatically adjusts itself impact your own long-term financial planning? Your peace of mind. Something to think